Okay, stock market technical analysis. Let's get into the trades. Drop me a thumbs up. Check out the private member group if you're interested in trade ideas, market charts, additional insight into the market, and things that I can actually communicate on a timely manner. When the volatility spikes, markets move really quickly. So pretty tough to keep up with that in the videos. I have to do it through the private member group. Link in the description below. Nvidia earnings on deck tomorrow after the close. So very important. This is a key stock. It's kind of the linchpin to the market because it's it's the largest company in the world, I believe, and it's the it's the most heavily weighted stock in the S&P 500 and the tech sector, the triple Qs. So very important. It is the king of AI, essentially, the AI trade. And so everything kind of hinges off this. So on the charts, we're looking at a daily chart in the morning on Tuesday. We're at support, basically. Nvidia is, trading. I've got support right here, about 179.90, somewhere right in there. You can see I've got enough reactions. We do chop through it a little bit, but in general, lots of reactions that have verified that level right there. And we traded down to that support this morning. And, when you're at support right ahead of earnings, are you going to break that support? And if you do, it's hard to trust as well. Any real major moves around key levels that take place or breaks through key levels right ahead of earnings is always suspect. So in general, we're at support. Where do we go from here? I mean, it's hard to say because we do have negative divergence for sure. So that tells me that we're going to go lower, all right, that we will go lower. Doesn't mean we're going to go lower ahead of earnings or right after earnings. They're going to come out, they're going to knock the ball out of the park and say that they've got that they're going to beat earnings because earnings at the end of the day are just expectations set by the market and by analysts, essentially. And so they know what those earnings are. They know what the high water mark is, and they have enough money. Nvidia has enough money to buy back as much shares as they need to beat the earnings per share estimates. So in general, they're going to beat earnings, but then, it's really how do they come out and talk about like their margins? I think that's really key is their margin contraction, and that's the market's not going to like that. So that will be the key thing that the market will be looking for is learning about that. Does Nvidia signal any kind of margin contraction? But the initial headline very likely will be earnings. So where do we go? We can obviously bounce. I've got resistance about 193.76. That's kind of the short-term resistance. And we'll have to look at that. On the downside, we break below this level, and then we're probably going to go down to 164.55 in the 200-day moving averages. And the bulls will be sitting there at the 200s looking to buy that dip. We haven't hit the 200s there since May this year, so very, very likely, high probability that you're going to come down to the 200s, maybe slice through them just briefly, but in general, you're going to have dip buyers and you'll likely get a bounce there. So, that would be the downside that I would see post earnings. But, we very likely are going to hold around current levels and maybe even bounce, on that initial headline. I could see something like this. Earnings comes out, they bounce it in the after hours, maybe rally it up to this 193 area, and then it gets sold into from there over the next coming weeks, and we sell down, eventually break this level, and head down to the 200s. That's one method. The way I'm going to trade it, just so you guys know, is I will very likely, I'm not going to trade Nvidia directly. It's too much risk just to take a position directly on Nvidia into earnings. But what I'd like to do is probably go into the Nvidia earnings short on the triple Qs, but nothing super huge. I don't want to go heavy on, on a short just because anything can happen. It's higher risk. So I would like to be short in case we get a gap down and we start to head down to those 200s, and I can add to that short. But I don't want to get burned too much if Nvidia comes out and pumps the market, because that's likely their goal, is to come out and pump the market. Flipping over to the weekly chart, just to give you guys the kind of the longer term look on this. On the weekly, you can see we've got negative divergence, and that's kind of what I look for, is what is the momentum doing as price is moving in one direction or the other. And clearly we've got negative divergence on the RSI and the PPO. So it looks like that momentum's moving lower while price has been moving higher. So this is divergent high price action telling me that's why I'm leaning towards a lower prices after earnings. Doesn't have to be on the initial headline right after the bell, but what happens on Thursday and Friday this week and next week? Where's the market at that point in time? If we see it lower than where we're at now, then that would very likely indicate that we are, starting to reverse trend like the divergences are telling us is going to happen. And then looking at the other Mag 8s, very important. You can see Meta, there's a gap to fill. It's right here at 608.54. We're below it today, but I suspect they're going to come in and buy it, and we're going to hold that gap right there. That's kind of what I'm thinking. Amazon, yep, at support. You can see the uptrend line right there. A little bit more downside, maybe. You could go down a little bit more, but in general, pretty close. I mean, the downside, maybe another % down to that trend line, but pretty close. And so, that's pretty good. Google, I don't see anything technically wrong with Google. I know Warren Buffett bought some of this. That's the headline. But so there's nothing wrong with this one. It does have negative divergence, but no sell signals, no break of trendline support. So that one's fine. Microsoft, yep, at support. You can see here, we got right there, just below it. But again, they're probably just chopping through it, running stops, and then they're going to hold that support. That's what I'd suspect, at least, leading into earnings. Apple at support. Tesla, no change there. Tesla's actually kind of back. Well, in general, Tesla's has this trend line here. We broke below, but really no close below, and so we're pretty much like at support. So that one looks fine. Broadcom, yeah, no technical change there. No sell signals on that one. Broadcom, I think we need to take out, it's really about this level, about 328. We'll call it 328 down to we'll say 328. I think you take that level out, you're probably going to, you're probably going to go fill this gap right here at 308, and then you bounce there, and then you head down to the 200s. But until we get a sell signal, there's no technical change there on that one. And then AMD, yeah, again, no technical change. So, I mean, I'm seeing a lot of these Mag 8s kind of sitting at support. So the shorts are not likely going to be playing out leading into Nvidia earnings. They're very likely going to, I could even see what would make a lot of sense is to rally relatively strong into the earnings, maybe the rest of today and tomorrow, and rally that up into earnings and then break down. That would be a good way to kind of, scare some of the shorts out that were late to the party, and then, and then break down after the earnings. Wheat looks really good. Again, this one I've been talking about for a while, but again, it's been the same setup. There's no technical change there, so I just have to continue to kind of highlight it, because by the time it plays out and starts to work, it'll probably be too late for taking a position on. But a wheat on the daily chart, big bullish falling wedge. All right, that's just very well developed bullish pattern. Large bullish divergence that's been just building and building and building. Big bullish divergence. Momentum continues to move higher as price is moving lower. So this is an accumulation pattern. Smart money has been buying this thing, loading up on a position over time. It doesn't happen all at once. It's been all, large institutions take large positions over time. They're not going to You know, this doesn't happen on a single day like a retail trader. And then you can see here, we're basically at resistance now on that wedge. So a breakout of this wedge, this resistance level, and this thing should really start to run. Okay, and where does it go? Well, the widest part of the wedge that I have is basically right there. And I've got, if we break out soon, that sends us up around 552 up to about 603. And that is the that's the projected target. So that's where I think we're going. That would be a move from where we're at now. That first target, 27%, and that second target about 38%. So that is kind of what I got. And then I think there's some higher targets. There's really, 602 looks like pretty good resistance to me. So anyways, want to point that out. We're just right there at resistance. Probably not going to break out today, but we'll see. Just keep an eye on it in the coming days, basically. And if it's not going to break out, then you're probably going to go back down to the bottom of the wedge. Okay, so that's your downside. And yeah, that's it. Risk reward. We need a breakout. Yeah, and I'm just scanning around. I'm seeing a ton of stocks sitting at the 200. Here's a firm sitting at the 200. Dell, kind of in between, but basically at the 200s. There's just a lot of them that are kind of sitting at support right now. Looking at gold, I don't have a super good read on it. When I'm, divergences on the daily chart are really not there. You can see we had a pretty strong run up in momentum right there at the peak. We had a correction, essentially, but we don't have negative divergence. We just have kind of a correction, essentially. So I can easily see gold making another push up, putting in new highs, and then maybe having negative divergence at that point in time. But as of right now, I just don't see enough that really tells me, one, I definitely don't want to short this. I do think there's really good, I think there will be an opportunity to short this thing coming down to 317.22. That's really good support, but I don't see enough in the charts that tells me that it's going to do that right now. So that is what I have on gold, and then obviously the miners will likely follow suit. Target earnings is coming up Wednesday morning. So, this is the last trading day before Target earnings. And the bigger picture, when I look at the weekly chart on Target, you can see here we are at a decent support. You can see weekly reactions there. And we're below it now, right there. But we have bullish divergence. That's a divergent low on the weekly. So that tells me when I see those divergences, what I'd be looking for is a recovery of this trend line. And it's likely going to come on earnings. So if you get some sort of a gap up on earnings above this trend line, I have it marked here about 92-ish, then yeah, that's going to be a recovery, and that'll signal a false breakdown, which is a bear trap. So the bears who shorted the break of this trend line will start to cover. So that's what I'd be looking for. It's obviously high risk to take it right ahead of earnings, but there's clear bullish divergence there. And when you can see here on the daily chart, you've got bullish divergence on the daily as well. Momentum's moving higher, so I like it actually as a long. I just if you want to take the risk, be my guest. All the trades you take are obviously at your own risk. But yeah, that's what I have. Okay, that's pretty much it. Obviously, it's all about Nvidia, so kind of pointed out some key levels, things to watch for, and we'll catch you guys on the next one.